we will go ahead and get started. Today we have for you the Mythbusters. This is information I had spent a couple of hours a few weeks back and was able to go through just a refresh webinar. And it was on understanding the VA myths that are out there. So many changes have come forth over the most recent years, and we've got to get the word out there to everybody. So this is the VA Mythbusters. We're going to introduce one of our preferred lenders, which is Linda K. Hardy with Caliber Home Loans. She is the sales manager out of the Tacoma office off of Tacoma Mall Boulevard in Tacoma. And Linda is a wealth of knowledge, and I think you all will enjoy this. So we wanted to bring this to the agents here at Best Choice. So Linda, go ahead.
I was going to say good morning, but it's not morning. Is it good evening? I am excited to take this opportunity just to talk about VA, and I really do want it to be a conversation because I want to know if you have questions that we're answering the right questions. I think what prompted this webinar to start with, can we do the PowerPoint, Shannon?
Yeah, let me get that up for you.
Okay, what we did the VA Mythbusters, and I have had, ever since we did that call, it's like all of a sudden it opened up everybody's eyes to just kind of where we are and where we've been, and the reputation that, let's talk about listing agents, the listing agents have with doing a VA. And I'd be on the phone with, I've been on with selling agents and with listing agents, and their perception of a VA offer being less than a conventional offer or other offers for that reason. So it's like, what makes VA an unattractive offer for a seller? And this is really hard not to have it be interactive, but you have everybody muted, don't you? If there's questions, maybe put them in there. But one of the common things that you'll always hear is the seller has to pay more to sell their home VA. And that used to be true. And it's still in our purchase and sale agreement. Rochelle, I don't know if that's being talked about, even getting rid of that whole paragraph, but a seller hasn't had to pay more for VA financing in years. So they used to have to pay the buyer side of the escrow fee and up to $300 in other lender costs. And we haven't had a VA transaction where the sellers had to pay that literally, so at least in the last 5 years. So I don't want to say that it can never happen, but most lenders have restructured their financing where that there's no longer a 1% loan origination fee. And when that 1% loan origination fee went away, that opened up the door for them to pay their buyer's closing costs on a VA transaction. So a lot of these myths that we're talking about were actually true on VA loans. I do want to share my screen for a minute if I can, Shannon. I guess I got to get back on the right thing I want to share my screen on. Oh, I get to do that, don't I? Hold on.
And while you do that, Linda, yeah, it's in our contract, but a lot of the brokers don't understand that there's a box they have to check. The buyer pays or the seller pays. I mean, the buyer can pay, and that's what we're seeing customary for a VA buyer. When they win the deal, the buyer's paying that VA, that $300 fee, right? That has to be on the contract. And they have talked about removing it, but it's federally, regulated. So unfortunately, it is in our contract. It has to be that way.
Okay. One of the things that came up this week, the first thing I made on this, I just did a little Word doc, is we have a new application in the mortgage world, and it is a new application for every lender in the country. We have 95 new entry points on this application, but probably the most significant one is the question at the very top about military service. Have you ever served? Are you currently serving? And I know that I have 3 transactions right now that I know I would have never talked to them about VA financing if they hadn't completed those boxes. It's like, oh, you have VA? Oh, well, yeah, but that was years ago when I served. Well, do you know if you still have any home benefits? And there are so many people that do and have no idea. They have just a real lack of knowledge is that they still have those VA benefits. So that is the most significant change on this whole application. And it was designed to increase VA lending. They say VA financing is probably going to be the #1 loan and that we do in the whole United States within the next 3 years with the changes that are coming out, because it's a great loan. It's a wonderful loan. So I did cover less proceeds to seller because they have to pay typical buyer closing costs. VA appraisal does not stay with the property. So Candace, you and I talked about this on our call. If you have an FHA appraisal on a property, that FHA appraisal stays with the property for 6 months, not with the buyer. It doesn't follow the buyer. So you can't, if you had a sale file for FHA and you had another FHA offer, you would have to use that first appraisal. There's no exception to that. VA doesn't stay with the property. Right. So it stays with the buyer. So that was just a significant. Here is what I went to the internet, is that our VA appraisals more strict. Who's heard that VA appraisers are harder on the property, right?
That's what I've heard, yep.
So one of the biggest hurdles VA home buyers must clear is the VA appraisal. The main difference is the VA has stricter guidelines when it comes to houses. The Department of Veterans Affairs guarantees VA home loans, so they want to make sure the house meets their standards. That is not a true statement, and that's the first thing that popped up when I Googled that question. So 2018, and I haven't validated my, let me close this, and accept, hold and accept. Haven't validated the exact year, but in 2018, Rochelle, you probably remember, Candace, you do, appraisals, VA appraisals were taking 4, 5, 6 weeks.
Yeah.
And that's because they had a VA panel of appraisers. So if you had a VA transaction, there was a VA panel of appraisers, and you couldn't choose which one, but they were limited. And there was just too much for them. They couldn't turn it. So they did a special order in 2018 and opened it up to and all appraisers, conventional appraisers. Anyone can do a VA appraisal. And a VA appraisal is exactly the same as a conventional appraisal. I'm going to go, look at me go back and forth with my little screens here. We'll get it. And how do I get back to my PowerPoint, Shannon?
I got you.
Oh, Shannon in the sunshine.
Yep.
Yep. Okay, let's go to the next page. Maybe it's on the next page. Anyway, VA appraisers, on VA, you don't have to even have flooring in the house. You don't have to have appliances in the house. We're learning this, Rochelle. It's, you know what, it's surprising. It's like saying, what? That doesn't even sound like it could be correct. The gentleman that wrote the...
Linda, I swear, I think I told them that. And somebody I told that last week too, that they had to have at least a stove, right? Is that not the case?
Nope. No, you don't have to have a stove.
Okay.
And you don't have to have flooring. So they're a little bit more liberal. You have to have a roof, and you have to have heating, and you have to have water source.
Right.
But no, their property standards are not any tougher than conventional.
Okay.
So if you're actually, looking at a VA and a conventional offer, it's like the appraisal is going to be the same. And I had a selling agent that tried to get me to convince his buyer. He said, show him your conventional option too. Here's VA. See if you can explain to him why he should go conventional, because I'll never get a VA offer approved in this market. And I said, why do you say that? Oh, because the inspections on the property, they have so many more strict guidelines, and it's just simply not true. He ended up going VA because it was just such a better deal for the borrower. And I can go into that if anyone's curious and how it's different. VA appraisers are more strict. No, they're not. buyers don't have skin in the game. I can't tell you, Candace, you were there, the compassion and the energy that came out on this when they talk about skin in the game for the people that have served our country and the sacrifices they've made in family. It's just like, we don't really put into perspective the sacrifices that they give. It's like, how much more skin in the game can you have than being that, right? So that was,
I think, Linda, they think that, you know, because they're zero down, that's kind of in the seller's mind, that they don't have skin in the game. I think that's the way they kind of equate it. But I've told my sellers, you know, it's more than that. They sometimes have, like, they've been given a, you know, my brother is in the Air Force and he gets a nice, because he goes and serves. And so they put these chunks of money into different accounts. So he has skin in the game, even though it's a zero down loan. And I've had to prove that to sellers. And it seems so wrong. I've always felt wrong about that, but I don't know how to overcome it. You know, what you say.
Well, yeah, it's the VA benefit, right? Well, I am actually on 2 transactions. We verified, we got their permission to share their assets.
Okay.
And share that they do have. This is just a benefit. This is a VA benefit, a home benefit. And yeah, it makes better sense for them to go zero down, or maybe not put 20% down. And this is why, but look at, they have the funds. They could if they chose to. They're making the best choice for them. So we've literally disclosed assets.
So that's all I need to do is just tell you, if you were my lender with my brother, hey, can you just get his permission? And then we can share that. You know, you could share that to the seller to help them kind of paint the picture that, yeah, no, he has skin in the game. You know, he certainly has the funds, because I think you're going in and it's hard to overcome this, the VA financing is not as desirable. It's you're up against a lot of competition, and it shouldn't have to be that way for people serving our country. I mean, it just doesn't make any sense to me. And then when you tell me that the financing and the appraisal is actually just the same, I mean, I don't get it.
We've got to get it out. We have to educate people, because it's not out there. I mean, there are so many things that are just have been for so long. But I will tell you that this is all, like, in the last 3 years, the changes the VA has made have been significant.
Okay.
So I think that we carry some of those old beliefs with us, which is normal. So that's why we're doing this, right? We have to educate people. We have to let people know that VA is not a tougher on the property, for sure. And then the buyers are not as strong. There are case study after case study on this, and I don't have them here, but when they look at the average credit score of a VA loan compared to FHA, it's much higher, and most of the time it's higher. I think it's like 60% of the time it's higher than our conventionals for their average credit score. Let's go to the next screen, because I think this is kind of, it's a more of a, oh, there's our property standards. So the water, the sewer, the heating, the infrastructure, accessibility, pest, and roofing. Those are your main points on a V. That's the same on conventional, right?
Yeah, same stuff.
Yeah.
Yep.
I think the only conventional would be a pest, but I mean, like, do you need a pest report, like one of those, a pest inspection? No?
That's in other parts of the country. No, it's not required here. That's only if it's standard to the area. If you were in Arizona, it would be required.
Okay. See, that is another thing I learned too. Because some lenders won't say that, Linda. They'll say, oh, we need a pest report too. I've had that happen.
Are you serious?
Oh,
well, I'll tell you, and I do hear you. So we hired at Caliber the guy that wrote the VA Lender's Handbook. So he knows VA inside and out, and he is passionate about changing the beliefs. Like, I mean, he's giving us facts. So I've been in this business since 1982, and I'm listening to this guy. I'm like, seriously? Really? So we're all learning as we go. So this is a little bit of insider info, maybe, and we need to get the word out.
Okay.
Good.
And before we
let's go to the next.
Linda, Mary was asking, what does the accessibility mean on this requirement?
Accessibility, like means of like handrails, getting into the property?
Steps into the property safe. It's all about being safe access to the property.
So it's not like the handrail may be 24 inches above sun. It's not like that kind of strict accessible guidelines that we have to follow. Is that right?
No, correct. Nope, standard. There's no special guidelines. There was another question. I just saw another question here. Let's answer questions. This is great. I can't, oh, should I pull them up?
I saw the question was septic tanks. Are those allowed for VA?
Septic tanks are absolutely allowed. We have no different guidelines on septics than we do on conventional. So we don't even require that it's pumped. We don't require anything. That's all done at escrow, right? Because it's a county guideline. So that's all done through escrow company. We don't have septic conditions on our approvals anymore.
Okay.
So both septic and sewer.
Correct.
And then we have another question. It's a real-time question for a current off-market VA transaction. Is it true that VA appraisers are only allowed to conduct exterior appraisals for owner-occupied properties, specifically for off-market property that has no pictures on the MLS?
That's interesting. Most of our VA appraisals give that option. When we see it, they say that they can do an exterior if it's restricted because of COVID or if they're making anybody unsafe. So I think that that can be denied for sure, saying, no, we want a full appraisal. Okay. I'm guessing that that would be what you would prefer, is a full appraisal, because there are no pictures and maybe there's improvements.
Yeah.
Right? Okay.
And especially with off-market, I would think the valuation would be very important to make sure that we're getting, full appraisal. Yeah.
Absolutely.
So yeah, but as far as VA, it's what I'm hearing from you, Linda, is it's no different than conventional. Some conventional loans will say, just do the drive-by. Other ones will say, no, we need a full blown. It really comes down to what the lender is going to require. Is that right?
You're right. Yep. The only thing that we don't have on VA is we don't have appraisal waivers.
Okay.
No appraisal.
And once in a while, we'll get those on conventionals with 20% down. And I have a 20% down VA, and we still didn't get an appraisal waiver. So, no, they don't have those. Yep. Can you go to the next screen for me, please, Shannon? Okay, so these were interesting conversations. Like, how could VA be better than conventional? So this was significant in one of them that we negotiated. He had money down. He was going to put money down, but if he did like a 10% down conventional loan, he would have no money for a 22 AD. But if he goes VA 0 down, he's got 10% for a 22 AD. Mm-hmm. He's a much more competitive buyer. And I think that in this market, I haven't seen many transactions. I've seen a few, but not many where there's not a 22 AD. And I think that would make it actually easier to negotiate on the VA, right? That can bring some strength to it, that we don't have that same flexibility on the conventional. So this,
I know, and we're seeing a lot more people using 22 AD that are winning in our office, Linda. So that is a tactic that in Pierce County we are using. And so hearing you say that VA, this is a great idea. I completely endorse it. We lost one last weekend just by $10,000. It was like two VAs competing with each other. And the one got it just because there was 10,000 more on his 22 AD than the other one. So it was interesting to see how that came through. But yeah, that is a strategy I think that would be very, very good to employ if you're working with a VA buyer, for sure. Let's talk with your lender.
And that's our job as a lender. So like for a VA buyer, does everyone understand funding fee in lieu of mortgage insurance? Mm-hmm. Right? So I don't know if we want to go down that right now, but FHA has mortgage insurance that is a substantial monthly amount. And they also have an upfront, 1.75% upfront. On VA, there is no mortgage insurance, so your buyer qualifies for more house. And so when you're bidding up on a property too, I mean, they really are a very strong buyer in this market if they've got any cash at all. And I think you can get excited about looking at those pluses. So they go 10% down. 10% down, they have a lesser funding fee if they go 0 down. So our pre-approval is at a 0 down, even at the higher amount.
Okay.
Right. So, I mean, it does take a strategy, and there are playing with numbers, like how do you structure that to go in there and make this strong and put them in a position to win. And then Tidewater, who knows what Tidewater is?
I do. Yep.
I know you do, Rochelle.
You've been in the business
So-
long enough, you've had a Tidewater or two.
Well, and I think that it's been perceived as a negative. And it was interesting on this call too, saying that VA is the only appraisal that will give you a heads up that they're having a challenge coming up with the value, and give both the listing and selling agent an opportunity to provide narratives or to provide comps and support that value. So they send us, if they can't bring it in at value, we get what's called a Tidewater, and we have 48 hours to put together a package and get it back to that VA appraiser so that they can reconsider before they complete the appraisal. And we don't get that. We don't get that on conventional or FHA. So I thought that ended up being a positive.
Mhm. Here's an example of a Tidewater. See, that's an example of
Yeah.
one pretty easily. So it just says from Don Kellogg, he convoked a Tidewater on me back in September. Here we go. And then that would be my 48-hour timeline, right, Linda? So I have to get
Yep.
with you
Exactly.
and make sure that we get this Tidewater thing taken. You're like thinking, Tidewater, what's this about? If you're a new broker, you don't even know what this is. Like, pass over
It
it.
doesn't even sound like mortgage. It's like, where in the world did Tidewater come from? Yeah.
My first one was like that. I remember a few years ago, but yeah, a good broker, that I work with, he was like, let's work on this together. And the buyer agent and the listing agent, we worked together on the Tidewater, and it came out with a great solution for both parties on that situation.
Excellent.
Yeah, but not all
Excellent.
of them are.
We've had them.
Yeah.
Well, and you know what? People think that they're stricter on the appraised values, and we're not seeing that either. We are having VA appraisals come in over sales price. We had one that came in 20,000 over sales price, and there was a 40,000 22 AD.
Right.
So it would be that you can get 3 appraisals on one property, and you will also know that an appraisal is not a science, it's an art. So, I think that's what to keep in mind too. Conventional or VA, the appraiser is opinionated and will bring whatever that is. I think the good news on VA is there's not a VA panel, because Rochelle, you'll remember that a lot of them were much older.
Yeah.
And they just had some very old mindsets, and it was really a challenge to do a VA loan, and those days are gone.
So is there?
I don't think
a way where you have to go in? When the AMC orders the VA appraiser, do they still get like a round robin, or is it the same? It's not that way at all. It's the same kind of pool of appraisers that they use.
It's not that you have to be approved to do VA, but most of our conventional appraisers are.
Okay.
So they had to go through that process in 2018 to be a certified VA appraiser.
So you can still contact that, when the appraiser contacts us to schedule the VA appraisal, we can still say, have you ever done this project before? We can still vet that appraiser, right? That's still.
Absolutely.
Okay.
Absolutely.
So it's not like where we get assigned. It was always in my mindset where once the appraiser was assigned, we couldn't change the appraiser because that guy was the guy that was routed through their online system. So I've got to change my mindset even on that.
Right.
Okay.
Yes.
Okay. All right. I'm warming up, but I still am kind of like.
Well, and I can't tell you, when I went on the internet and just started Googling things, it just, I'm going to share this one other thing with you. Will you stop your screen share? Do you want to continue? Oh, can I stop yours, Rochelle?
Yep.
That's what it said. So what to do if a VA appraisal comes in low? I'm not sharing it, share. I want to see if you pick up from this. So I'm looking at this one right here. One of the biggest hurdles VA home buyers must clear is the appraisal. The main difference is the VA has stricter guidelines when it comes to houses. This was posted, it says March 17th, 2021. This is current information that's out here. The Department of Veterans Affairs guarantees the VA home loan, so they want to make sure the house meets their standards, same standards. Unfortunately, VA appraisals can work against the home sale. If a VA appraisal comes in low compared to the loan amount, problems can occur. Is that not true on conventional? For example, a home on the market for $275 can get a VA offer with all $275 financed. But if the VA appraisal report says the home is only worth $265, then suddenly the VA will only finance up to $265. So I will tell you that every lender on all conforming financing will use the sales price or the appraised value, whichever is lower, to determine our maximum loan amount.
Yeah.
Anyway, I thought that one made me laugh. It's like, what? Like alarming that this VA loan, if it comes in low, you have to change your sales price. You can pay above appraised value on VA. They don't restrict you from doing that. It's the same.
So this guy, this Thomas, almost like you need to vet whoever is putting this out there. The guy maybe doesn't even do loans or doesn't even put VA loans together, or he's not even a VA.
Well, this guy was military VA loan. I mean, it's just like you'd think that they're specialists, right? And so you would trust their information because the name of their company. So I am happy to be a resource. If you are working with other lenders, you've got closings in process. I can't tell you, I'll tell you a situation that I had this week that kind of stopped my heart because I'm getting all excited about this VA, and I got really creative on how I structured this transaction. And they wanted to buy non-contingent, and they already had a VA loan on their house right now. So like, well, we can't use our VA again. Right. And I said, actually, you could use your VA again. We've got bonus entitlement. As long as you have a down payment, you can have a second VA loan. So that we got through that hurdle, but they were wowed. They couldn't even believe that was a possibility. But if you use bonus entitlement, you have to put like a 20% down payment. There's a formula that we go through. Okay. So my conversation was, if you're going to sell your house, let's assume your house is sold and you've got your proceeds. How much would you put down on this house? And they said 350, right? So I said, all right, let's do 150 cash and do a home equity line of credit for the 200. Right. So when they sell their house, they pay back their cash and they pay off their home equity and they have the loan they want. It was beautiful. They were thrilled. You guys are so awesome. I get my approval back from underwriting and they say VA guidelines. Please review VA guidelines. You can't have a second mortgage with an interest rate higher than your first mortgage. Oh. And I'm like, what? So I go into my guidelines and I'm clear as day. It's right there. Here's the guidelines for secondary financing. So I probably lost 4 or 5 hours to extreme stress. I came up with my restructure. And then someone in my office said, call Jeff Wilson. He's the one that did our refresh call. Call Jeff Wilson. And I called Jeff, I emailed Jeff. He got back to me within 10 minutes. He said, you can get a single loan exception for this all day long. That's an old guideline. I'm like, oh my goodness. Yeah. Right. So, I mean, he's invaluable. And then we have a whole department. We've had people that can't get certificate of eligibility for people. We have access to all of it through Caliber. So we can get certificate of eligibilities within like 30 minutes. I send for it and I have it. We have our VA bars and it's like, I already have your certificate of eligibility. Well, how do you have that? So I'm really excited about what we're doing with VA and we're learning all the time.
Yeah. How do you compete with people that I know Caliber is really big, but there's others that I won't name names, but you know the names of the people that they are veterans, they have some sort of veterans in their name for their lender. So the veteran thinks that they're very knowledgeable, but you and I both know, Linda, they're not. They have, the escrows take a long time. They drop balls left and right.
Yes, they don't know guidelines.
Right.
I think that if I had a relationship with someone, I would say VA loans are a very profitable loan.
Mm-hmm.
And if a lender were going to have a niche that they wanted to make a lot of money, they would do the VA market as a niche. We've got bases here. So there are lenders in our business that have VA even in their name, and they're not VA experts, and they don't have the resources that you need. I mean, if I trusted somebody, that's the truth.
Yeah.
Right. And I looked at this VA military dot whatever that I showed that's on Google. It's the first thing I pull up, and it's just incorrect information.
Yeah. I mean, I think it really comes down to the experience and how many. I think some of the questions that we'd want to ask is, have you done a VA loan maybe in the recent 6 months, right? Or have they used our new contract, that doesn't have a checkbox for checking the funding fee? I mean, that's old. So if a lender is not up to speed with some of the new contracts and the way of doing, ordering the appraisal and that kind of thing, that would give me pause if I was a veteran trying to figure out what lender do I want to go with, You
know what, Rochelle? I think we'll do a checklist. Like if you get a VA offer and you have a pre-approval letter from a lender, what do I need to ask that lender?
Yeah, that would be
What
great.
are my checkpoints?
Mm-hmm.
I like that. Okay.
That would be awesome to have.
We have a couple of questions here too. So
okay.
Is there a cap on the
Linda, that's how fast it goes. It's like 36.
Okay, really quick. So is there a cap on the purchase price for a VA loan?
Oh my goodness, another new change. You can buy $2 million zero down on a VA loan. There is no cap. There is no maximum loan amount on a VA.
And that was before the
That's
pandemic,
new.
Right, Linda? That was like
Yes.
before, that was like in 2020, I think January 2020. That's how much we have kind of been asleep during the pandemic to all the changes with VA.
Yeah.
That's
That's huge.
That is.
Mm-hmm. That's a great question.
So zero. Well, and you know what? The guidelines are, you can be more creative. There's just options with VA. Now, when you're going back and forth on qualified buyers, let's just say, for example, conventional transaction, and I've got someone that has 30% down and their debt to income ratio is 52. We're not going to get that loan approved. If I have a conventional loan and their back ratio is 60, we're not going to get that loan approved. If it's VA with the same 20% down and their back ratio is 52 or 60, we can still get an approval on that file. The algorithms are built in. So what would help me get that approval is if I had $600,000 in my investment account, right? So they take other factors into this. It's like it's frustrating for people that have a lot of money in the bank, but they can't get approved for a house. It's like, I'll make the payment out of my savings account. Well, that's not an option. Even for a high back ratio on VA, it's all day long. We did a 67 back ratio, but the guy had over 800,000 in the bank.
Right.
It's like, he can do this, right? So, I mean, VA just really opens the door for them to be able to do more.
So
it's a good benefit.
I think the real thing, Linda, that I'm taking away as a listing agent is we need to open ourselves up to more VA. When I scour the MLS, I see cash out conventional a lot. And it's like, I don't think that these listing agents know that they're missing out on a huge opportunity, right?
You know what? That's it right there, Rochelle. You just said it, right? How many buyers have VA benefits that you're closing the door to, that's their best choice for financing?
Right.
They're strong. And if that's going to be the biggest number one loan going forward, then that is, why close that door? It's just the misconceptions. It is absolutely just the appraisal's harder and they're not qualified.
Right. Yeah, I had one in
Yeah.
Bellevue, and it was funny because, retired vet, right? And using the VA, I think it was 17 offers. It was a year and a half ago. And we ended up going with the VA. It was the highest on the escalations. And the guy was working with Caliber, I believe, as well. So that was awesome. And it went well. And I had appraisers call me after, like 6 months after, going, "How did you get that done?" And I was like, "I don't know, a good lender," I think is what I said. But it was,
Well, yeah, and experience doesn't always matter. You have to tune in, right?
Yeah.
We have so many things. So unless, as a lender, unless it's part of your, I'm going to learn VA, I'm going to be a VA expert, I think we even miss it in the lending industry. So I kudos to Caliber for teaching us and getting our heads right? Because unless that's an objective, it just goes on the wayside like other changes.
well, fabulous.
Yeah.
Candace, anything else that came in that were questions that we didn't cover? I think that was great, Linda. It was
Here's
awesome.
one. If their house they're selling hasn't yet closed, does that affect their liability? I think that was in reference to the scenario that you had where the
non-contingent.
Yeah.
Correct. Mm-hmm.
The non-contingent, their liability, I mean, they're liable on their first VA. Well, I'm not sure I understand the question. Are we talking about insurance or?
I think you answered the question in your scenario. I think that question came in right when you were explaining how it could be done and how you found the loophole.
So it's called bonus entitlement, and the worksheet is so simple. And so if they have their existing VA loan, then we do the worksheet, and it tells us the minimum down payment for them to be able to use VA. And the difference when I did this, so the example I'm looking at him right here, we have 804 credit scores. We have 15% down, conventional or VA. He was going to go 15% down because he was investing all of the proceeds of his last sale. So we compared side by side. Interest rate on his conventional was 3.25. Interest rate on his VA was 2.75.
Wow, that's awesome.
And same money out of pocket, right? He's still doing 15% down. He's a strong buyer, and they really wanted him to flip it to conventional to get the offer accepted. So that's when we said, can we just show your assets, right? Are you okay if we just show that you're liquid, you have the resources if you chose to? So it was more lucrative. 2.75 is better than 3.25 for him, right? It's an option. What happens, Rochelle, if I do a conventional and I flip to VA? So I go conventional because I can approve them conventional, right? I could give a lot of our borrowers a conventional approval. But if we do that to win, and then we flip it to VA, what happens with? I mean, obviously that's not what we want to do, but
we have to get a permission by the seller, as well as the buyer to make that happen. It's a change after the fact, and there's a form for that. Of course, there's a form for that. But you know what? I think it's just educating and overcoming those obstacles, and it's a tough one, Linda. I talked to other experienced listing agents, been doing it a long time, like I have, and they're just they can't get their mind wrapped around that it's no different than a conventional buyer. It's like they can't reprogram. And so for that, I would say, I think you gave me a great strategy. It's like, let's get the lender on the phone. Let's show you that they're pre-approved with conventional as well as VA. Maybe that will help and ease their mind to accept, or to show the assets. I thought that was a great idea as well. So there are ways to communicate, and I think get everybody on the same page, but it's an uphill battle. I mean, I'm not going to lie, to talk to, you get 20 offers and 4 of them are VA and the rest are conventional. In your mind, it's hard to overcome that.
Wow. Well, thank you for allowing us to do this and just to start talking about it, because
I think so.
Just example after example of how it's good. Good.
Awesome.
Thank you.
Thank you for taking the time, and Candace for putting this up. I appreciate that. And we'll see you guys all next week.